Hi, everyone. Welcome to today's session. Binta Financial acknowledges that we are operating on the unceded territories of the Musqueam, Squamish, and Tsleil-Waututh nations. We honor the stewardship of these lands and commit to reconciliation and equity. So if you don't mind dropping in the chat where you are joining us from, that will be very much appreciated. Welcome, BBABC, and also acknowledge that this event is brought to you in collaboration with BBABC. For those of us that do not know BBABC, BBABC is dedicated to supporting and promoting the growth of Black-owned businesses in the region. It fosters economic empowerment and helps to create a supportive community for Black business owners. I can see Nerissa here. I don't know, Nerissa, do you have like a minute? Do you want to say something to the group for like a minute? That you're welcome to do that if you have something to say.
Thank you, Michelle. I'll just keep it brief. I just want to say thank you to everyone that joined this afternoon. Thank you for Binta for partnering with us to have this session. Credit is incredibly important for us, for our community, whether for personal or business. So, this is the first of many. We'll continue to have partnerships with Binta to find ways and to provide information, the necessary information that our community needs to build and grow and be strong. So thank you for everyone for joining today, and, enjoy the session and make use of the information. Thanks, Michelle.
Amazing. Thank you so much, Nerissa. Now we're going to dive right into this session. Like I said, we're going to go very hot and fast because we're trying to finish within an hour. We know that this is evening and lots of us have things to do. So thank you again for joining us. So the question here says, are you ready for this? And the session is going to be a solo session. It's going to be handled by Pascal Okundu, who is the co-founder of Binta Financial. And I think this is a very important session because Pascal is going to be sharing with us some of the insights which form the reason behind why Binta was started in the first place. So Pascal, if you're here, I would like to hand over the stage or my microphone to you. Welcome.
Thank you, Michelle. I think I'm here. If anyone can hear me, please give me a thumbs up, drop a note in the chat. I can see some very familiar names in the chat already. So give me a thumbs up. I'm excited to see you all. So thank you. Thank you so much for making it this evening. I imagine that there are 1,001 things that you would have chosen to do, especially if you are in the British Columbia area. It's beautiful out there. You've chosen to be here, meaning that this is such an important session for you. So I'm going to be sharing a lot tonight, right? And I need you to have your pen and your paper. I'm going to share a lot of what we are seeing from data that we've been reporting for tenants, for people building their credit. We're going to show you a lot of insight from this session. And the reason why we are very passionate about today's webinar is the fact that it brings together a lot of the reasons why we've decided to build Binta as, sorry, give me 1 second. Did I? Okay. Sorry, something popped up on my screen. I wanted to be sure that I'm addressing it well. So we're sharing a lot with you about some of the essence why we build Binta, why we're building Binta, and how we've been able to support people. I'm going to also share a lot of what we are seeing from people asking questions, mistakes that people are making, things that are not clear. I think that generally, for most people who have been in Canada, whether you are new, you've been here for a few years, or you were born here, you've been here all your life, there's still a lot of mysteries behind this whole concept of credit. And what we want to do as an organization is to unbundle a lot of that and make sure that people are very informed, very aware, because at the end of the day, you can hardly have a whole day without either spending money, making money, or having a conversation around money, which is why we started having discussions with organizations like BBABC, and thanks to Nerissa and Clavia who are here today. And they decided that, okay, we're going to partner with you guys. Let's make sure that we bring this to life and spread it to the broader community and make sure that more people, Black, white, anywhere you are, irrespective of your background, you can actually come into this platform and learn a whole lot more about credit and how you can put your finances together. Okay, so without spending much time about the intro, I will jump right into a few questions. Now, here's how we're going to do this. I am going to ask you questions, and please, if you are using your phone, if you're on your laptop or your desktop or your iPad, whatever device you have, I will need you to jump into your chat and throw in your responses. Hi, Rohi. I can see a name saying hi to me. Hi, Rohi. So here is the first thing we're going to do tonight. So I want you to tell me, go into the chat. Don't be ashamed. We're not going to judge you. Nobody is going to put a gun to your head. We're not going to be offended with your responses, right? But I want to know just by, what do you call it now? Just drop your notes in the chat. When last did you check your credit score? If you're bold enough, drop your notes in the chat. And all right, Marielle, thank you so much. Marielle said last month. Maxwell said last night. Okay, keep the answers coming, please. 2 weeks ago. Wow, fantastic. Never. Daniel, thank you for that. That's the boldest answer I've seen today. A few weeks ago. Okay, keep them coming. Clavia 6 months ago. Last night, a few months ago. Ashley, Jamira 2 months ago. Femi last night. Okay, please keep the answers coming. And okay, credit union sends me once a month. Paul Jones, thank you so much. Paul, I want to be your friend. I also want to be sent my credit score once every month as well. Jimmy said 4 months ago. Okay, fantastic. Okay, sounds like we have a good mix of okay, many years, Siobhan. I can see that. Thank you for sharing. Okay, thank you for all those great answers. And I'm going to show you how and why your credit score is such a critical part of your being, right? And this is not psychology, this is finance. And you can see how there is a very strong correlation between finance and psychology, okay? And that's where the whole concept of credit is built. And then I usually like to start this session by defining what a credit score is before we go into some of the mysteries and uncover some of the, what do you call it now, the black boxes, things that people have never imagined are impacting them, right? And the reason why we decided to focus as an organization on this piece is a lot of lives have been made just by people understanding how the credit system works. At the same time, a lot of lives have been held stagnant simply because people are ignorant of what the credit score or credit history is. And a lot of people have been working really hard, but they are still unsure why they are not making progress. Each time you knock at the door of a bank, you get a no, or you get all these very difficult conversations and you wonder, why am I not able to make it through? Why is mine so difficult, right? And then sometimes you also doubt or wonder why, you check your credit score today, you come back in 5 weeks, it's something different, right? You come back in 2 months, it has reduced. And then there's just so many things online. You open Instagram and you see all these great influencers, 60,000 followers, 100,000 followers, 2 million followers, giving you advice on credit, right? And those are some of the things that we want to make sure that we address. If people are not trained, if people are not certified, if people do not have the right or the credentials to talk about things like credit, you should be very mindful of how you take advice, right? I'm very sure that you will never tune into my Instagram channel or my YouTube channel and I'm talking to you about how to be a model. You won't pay attention to me because I am not one, right? Or you are having a difficult time with your health. You won't come to my YouTube channel to learn how to do that. Why? I am not trained to be a health expert. So you should never take advice from people who are never trained to speak about the topic, okay? And which is why we want to make sure that we provide a lot of information to, break through these barriers of ignorance that people have, okay? So let's talk about what is a credit score. And I want to make this in such a way, you already know what credit score is, but I'll flip it to you in a different way that you will absolutely never forget. And you will see why it's impacting different areas of your life. Okay, so I usually say that a credit score is that mysterious number that decides whether you get an apartment or you just get an absolute silence from a landlord. That's what a credit score could be. Okay. I know some of us have tried to rent places and no one is talking to you. You put in your application and you don't get a call back, and you call and no one even responds to you, right? And it is also, think about it this way. Your credit score is the adult version of your report card. How many of you recall report cards when you were in, early days in, I don't know if they still do that today. I don't know if they do, but early days in school, you go to school, you spend a term, and at the end of the term, they give you a report card on your performance, right? The credit score, your credit report, is the adult version of that. The only difference here is that it determines whether you buy a car or whether you sleep in your friend's couch, right? Meaning you can't get a house. So it's how you are judged, unfortunately, and sometimes you are judged even beyond ways that you can imagine, okay? And your credit score is basically your financial CGPA, right? So you work very hard in school, you get good grades, but unfortunately in this regard, your credit score is not built by hard work. It's not built by how many nights you stay awake trying to make it up. None of that counts, right? We'll show you the things that make your credit score count in the course of this session. Now, let's get a bit more serious. So your credit score shows in real sense how likely you are to pay back the money that you borrowed. That's what a credit score is. So whether you have a 300 or you have a 900, your credit score shows how likely you are to pay back money when you borrow it. So the next time that friend calls you and say, hey, Jimmy, can I get some money from you? I'll pay you back. You might want to ask them for their credit history before you make that decision. But seriously, I think it's something you should think about, right? I'm not saying that if your brother or your sister or your mom or dad or somebody calls you and say, can I get some money from you? I'll pay back in 2 months. You ask them to go bring their credit history, right? So I think those are things that we can resolve at relationship level. Now, credit isn't about wealth, right? So you can be rich or poor and still have a bad credit score. That doesn't make sense, right? It's about trust signals. Okay. The thing about credit score is that it is picking every digital or financial footprint that you leave as you transact as far as borrowing is concerned. So anytime you've ever borrowed, you've taken a loan somewhere, a bank, a credit union, or a fintech company like Binta, anytime you've ever gone to say, I want to borrow money, or anything that relates to money passing through your hands or transactions passing through your hands, the system starts to track your behavior from that very moment. Okay? So you want to be mindful of that. So it tracks your behavior. It doesn't track your money. It tracks how you spend the money you borrowed. It doesn't track the one that you have in your savings. You can have $1 million in your account and your credit score can still be low, right? And you can have no dollar in your account and still have a high credit score. Okay, and I'll show you how all of that are all connected, right? Now, the big question is who controls this whole credit system, right? Who is this institution or group of institutions that have come together to make life so demanding as far as building these three numbers phenomenon together? Okay, so the credit bureaus do that. So in Canada, we have two major credit bureaus. The first one is Equifax, and then there is TransUnion, okay? These are the two authorized organizations that aggregates every data from banks, from credit unions, from fintech companies, everywhere you've ever borrowed money in this country. These two organizations have access to that data, and they can tell you whether you've paid or you haven't paid, okay? And then banks also feed into that data that is controlled by these two organizations. And now, just recently, landlords are also beginning to join that conversation. So your landlord will be contributing to the whole credit history that you have, okay? And anywhere you've ever borrowed money, that person, as long as they were able to get your information and you applied for something and you were told that Someone admits the participant at the door. Okay. Maxwell, Michelle, if you guys can please keep your eyes on the door. I can't see anybody in the waiting room. Okay. So all of these people and more actually do influence what you see in your credit score and how it turns out. Okay. Now, your credit score will usually fall between 300 and 900. Now, here's the thing. Your credit score can be so bad that it's below 300. That will now be a special investigation matter. So you will usually fall between 300 and 900. Okay. And what it simply means is that if you have a high score, meaning that if it is closer towards the 900 side, then it means that you're likely going to get approvals for loans, for housing, renting. It will be easy for you. When you do borrow, your interest rates would be standard, or you can negotiate something even lower. Okay, so this is why how you play around those two extremes, 300 and 900, is very important for you in terms of how what you're able to access. And then if your score is low, it means that you are a high risk borrower. That's how you're perceived. And guess what? You might not even be. That's the sad thing. So a lot of very responsible people are falling under this category. A lot of people who have the good conscience, the willingness, the moral uprightness, the best of intentions, the willingness to pay back loans, still end up having low credit scores. The big question is why? So I'll show you all of that soon. And credit score is not about intention. Nobody walks up to you and say, Jimmy, I've called you twice. I'm seeing you on my screen. Sounds like we'll become best friends after this. So nobody comes to you and say, hey, Jimmy, let me see your mind and see how you're thinking. Are you going to pay or not? Nobody does that. So what they're able to do is they track the data that you're able to provide through how you pay, when you pay, and all of that. And sometimes I will show you how little, very avoidable, needless mistakes can utterly put off your credit score, and that will affect you for a very long time. Okay, so usually you will see a credit score map like this going from 300 to somewhere around 850, 900, right? And it goes from poor to fair to good to very good, and then of course to excellent. And I know that my map is showing red to be the good zone and green to be the good zone. Some other charts will reverse it. So the colors do not matter as much as the numbers in there. Okay, so what you want to do is you want to aim to be more on the right than on the left. Okay, being on the left can make life really hard. Okay, you want to do everything you can to be on the right. And that doesn't require you earning more money. Okay, it has nothing to do with how much money you make. So I'll show you how you can actually play around your accounting and your credit cards and your rental payments, and that can help you get your credit towards the right side of the picture. Now, in summary, everything I've said now, if you've forget everything I said, don't forget this. Your credit score is your financial identity. So if you walk up to a landlord to borrow, to rent, to a bank to borrow, to a telecommunications provider to access anything, this is how critical this identity is, right? They will ask you for your driver's license, in some cases, another piece of ID, but this is what they will never ask you. They will pull it themselves and make a decision without any sentiments. Okay. So your credit score is calculated this way. From what you can see, your payment history carries the biggest weight, right? So have you paid your past credit accounts on time? Like how on time do you pay your loans, your credit cards, your line of credit, your mortgage? How on time do you pay them? So this chart shows you how distributed each of these elements impact your credit score, right? And I've seen people pay attention to one versus the other. So your payment history carries the biggest portion. The amount you owe to, which is how much money you owe and how you're able to use them and pay them back on time, also helps improve or impact your credit score negatively. right? If you are getting a new type of credit, the type of credit mix that you have. So if all you have is just a line of credit, that's all you have. Your credit score might not grow as fast as someone who has a line of credit, a credit card, list like different types of credits. Not that you have 5 lines of credit. That is just one type. Okay. Not that you have 5 credit cards. That is still also one. So you want to have a good mix of credits. That actually helps enhance and build your credit score faster. And of course, the other thing is the length of your credit. How long have you been borrowing for? These factors impact your credit score in these degrees. Okay. Now, here's an interesting fact. If you've ever wondered who checks my credit score or who will need my credit score, who would ever check it apart from the banks, let me show you who else, right? So anybody who wants to give you money as an institution, they will need to check your credit score. Okay. If you want to buy a car tomorrow or you want to change the one you have, the car dealership would check. Okay. Now, another person that will likely check is some insurance providers will want to see how creditworthy you are, depending on the type of insurance program you are accessing. Cell phone providers will also do that. Some employers, there are some jobs you cannot take in this country if your credit score doesn't look good. So some employers will ask for that. And let me shock you. If you're not careful, as the world is changing now, people are getting more informed. If you're not married here, maybe your future spouse will ask you for your credit score. Okay? It could become a requirement on the lighter notes. You'll be very surprised. Now, let's spend time to talk about some of the biggest mistakes that we have seen people make on their credits. And please, I need you to pay keen attention to this part. I'm going to move very fast. There are so many of them. We had to just try and distill them to a few. And we've also had people send forth questions ahead of the webinar. And we've also seen how we can add some of that to this. So here's the first one. So we have seen people who they have a credit card and their minimum payments per month is still somewhere very low by virtue of their utilization. And if you do miss, even if it is $1 past due payments, it will ding your credit score. So what impacts your credit score in terms of payments? It's not the amount of payments. It's actually the timing. So if you do not pay on time, the minimum amount. So before you get that credit card, always ask the bank or whoever is giving you that credit card, always find out when are you expected to pay it on time. And I would usually recommend try and make sure you drop your minimum payment way before the deadline because sometimes you can forget. A smarter way to do that is please do set up pre-authorized debits in your account. So the money can leave your checking account into the credit card account. If you set it up that way, it runs in perpetuity. You don't have to remember. What we've seen most people do is the bank will call you and say, hey, Maxwell, you are past due on your minimum payment. Guess what? At that point, you're already in danger. Let me show you the impact of that. Your score can actually drop between 30 to 100 points, even if you are late by $1 payment. Okay? And in case you are wondering, what's the impact of 30 points to 100 points? It can actually increase your spend if you are going for a mortgage or any type of loan. You might end up spending thousands of dollars by virtue of a higher interest rate. So you want to be very careful to make sure that you pay up your minimum payments on your credit cards. And if you can pay more, I will always recommend you cycle it out every month and then make sure that each time you use, you replace before it's past due. Okay? Beyond the fact that your point drops, it's also that you can get rejected for future loans simply because of this. So let me share a story here. So in my early days when I came to Canada, I had no clue. I used to work in banking. Okay. Where I immigrated from Nigeria. I used to work in banking in Nigeria and I came to Canada, but I found out that the financial system here is different from what we had. It doesn't mean that it's inferior in Nigeria and superior here. No, they're just different. Okay. I walked into one of the stores and I was offered a card, which I accepted. I could pay, but I accepted it. And I forgot to make my minimum payment. It was around $14 a month. And I used to work for a bank here at the time. So they were sending me letters for past due payments, pay your minimum payments. And when I see the letters, I'll just keep them. In my mind, I thought the company was sending new products to me to buy. So I was not interested. So I'll just pack the mails and never open them. I still never did. Guess what? 30 days passed, I wasn't paying. 60 days passed, I wasn't paying. My plan was I'll just go give them all the money and just pay out. And that's it. I now applied for a line of credit and I was rejected on the spot. My question was, you can't reject me. I have a huge salary. I'm applying for just less than $5,000. Why are you not giving me? The response was, you have a bad credit history. Now, what do you mean? I said, I don't have credit. They said, no, you have credit. Everyone in Canada does have credit. And guess what? They opened when I gave my consent, they pulled my records and they were showing me this is 30 days past due, this is 60 days past due, this is 90 days past due. I had a refreshed education again. That was when the concept of credit became real to me. That's not all. I kept pushing for the line of credit and I got it, but guess what? It was way more expensive for me than an average person would get. So the bank gave it to me because I had salary that could pay it off, but they charged me higher. And guess what? I ran that loan for 3 years before I paid it. So I would have saved myself so much money if only I understood what I'm teaching you today. So the lessons that I'm sharing today cost me thousands of dollars to learn them. Okay, so you want to be careful that you pay up your credit card on time. Otherwise, you risk having issues in the future. Another challenge we've seen is that people max out their credit cards every time. You have a $5,000 credit card and you max everything out, right? And then when it's nearing payment date, you quickly pay. So you want to be very careful with that, okay? There's something called utilization rates, which impacts your credit history. And here's my recommendation. So let's say that you have a $10,000 credit limit. You are advised to usually not spend beyond $3,000 per time. So try and keep your spend within $3,000. If you are always going beyond 5,000, 7,000, 9,000 every time, it means that you are pushing your utilization higher. That has a negative impact on your credits. So that's something you want to be careful with, okay? And what it means is that when the banks check your records, it looks like you are overextending yourself. It looks like you're having a crisis. You're pushing to spend more. And that actually has a negative impact overall on your credit score, okay? And what it means is if you want to apply for another loan or a credit card or a mortgage, all of those records come to play and it can actually have an impact on you paying a higher interest rate, which is, in translation, more thousands of dollars out of your pocket than was necessary. Okay. Here is the other challenge that we've seen most people, mistake most people make. You have a CIBC credit card, you have TD, you have RBC, you have BMO, you have National Bank, you have Van City, you have Coast Capital, you have 9 credit cards. Hooray, you're a champion. Guess what? It's quite dangerous. The reason is you are overextending yourself, you're taking too much, and it becomes very difficult to manage multiple credit cards. So when that happens, you expose yourself. So each time you access a credit card, you apply for one, guess what? There is usually a hard pull on your credit score and it reduces. So the more credit cards you apply for, guess what? The lower your credit score becomes. Okay, so you want to find the right mix, and you also want to make sure that you don't apply for too many within a short time. That will hit your credit score in a very bad way. And the lenders can also perceive you as very high risk. So when I used to work in the bank, this is some of what we saw. Somebody comes to bank A and they apply for a loan. They go to bank B, apply for the same loan, go to bank C and apply for the same loan. And they're trying to look at who gives me the best interest rate. Guess what? You can end up getting the best interest rate, but guess what you've done? You've hit your credit score 3 times. And each of those times have a negative impact on the score. So at the end of the day, you can get the loan you want at a lower interest rate, but guess what? Your score falls short. And in that process, the person giving you the loan might have a reconsideration, like, why are you moving around all the banks trying to apply for the same loan? So all those things are tracked and they show up. So you want to be very careful before you go that far in terms of how you apply for loans. Okay. And then the other thing we've also seen is Canada has an average rent payment for tenants, an average of $2,000 across the provinces, right? I know if you're in Vancouver, please don't shoot me a gun. I know that that's higher than that. And those of you in Toronto. Now, it is found that over 60% of people in Canada pay more than 30% of their salary on rent. For some people, it's way higher than that. That usually is the largest chunk of payment you make on a monthly basis. But unfortunately, most people who spend this much on rent forget to understand that the rental amounts you pay can actually build your credit score. It's that simple. All you need to do is report it. Okay? So if you pay your rent, just report the rent. If you're not sure how to do that, please go to our website, bintafinancial.com, and report your rent. It's money that you are paying anyways. You must pay your rent. Otherwise, you're going to have a love letter from your landlord. So why don't you make that rent count for you? Given that your credit score is a critical part of, if you're planning to own a house in the near future, that's something you want to think about. Okay. And then we've seen some people who were very upset or disappointed or unhappy with how they were treated by a bank. And they've decided to say, you know what, I'm done with you guys. I want to shred all the credit cards that you gave me. Okay. Or in some cases, they've had a not so good experience with the particular credit card that they've used for years. They're like, I want to destroy it. So that's not a very sound decision. So you want to keep your old credit cards. Okay. The reason is the age of your credits has an impact on the weight of your credit score. So you don't want to just destroy it because it's something you've built over time. Okay. And if you take off that information, if you tell the bank, close the card, I've destroyed it, what it does is it erases good data that you've built over time. And not just that, it can actually ding your credit score by up to 50 points if you're not careful. So don't close old credit cards. Find a way to repay, and then get it in a good place. But don't close it. Okay. And another challenge we've seen most people make, mistake most people make is people wait for too long before they start taking the whole notion of building their credits serious. Now, let me tell you how this works. The day you want to buy a house is not the day you start to build your credit. It's too late. Okay. It's like trying to grow a tooth the day you want to start eating. It doesn't work that way. It takes time credit takes between 12 to 24 months to start looking healthy if you have a bad one. So it's not something you just wake up tomorrow and you say, I want to be serious from tomorrow because I need to access a loan next week. Total disaster. You will be in a very difficult position for a long time. So the best time to start building your credit history is when you don't need it. I'll say that again. Start building your credit history when you don't need it. When you need it it's too late to start. Why? It takes time to build. Okay? And another reason is most lenders want to see between 6 to 12 months of history before they can make a more informed decision. Okay, so delaying the building of your credit means that you are delaying that house you want to buy. You are delaying that beautiful car that you've been eyeing. Okay, and you're also delaying the fact that you can access better rates quicker. So the more you delay, the longer it takes for you to start accessing better interest rates. So don't leave this to be something you will do in the future. The best time to start is right now. Okay. This is something we've seen most people talk about. They don't want to look at their credit score. It's too, they don't know what they're going to find. So they don't want to see it. So it's too dangerous. Let me be honest. You want to be very brutally honest with yourself. Okay. So pull up your credit score. I saw some of the comments in the chat. Fantastic comments here on when people check their credit score. Please check your credit score very regularly. And here is why. We've seen so many people show up and say, I saw a loan under my credit score. I cannot remember ever taking that kind of loan. I saw a money that was recorded that I took from somewhere. I saw a credit card that I don't have. So we've seen people spot errors in their credit score. Sometimes those errors can linger in your credit score for a year or two. If you don't check the report often, you will never see them. But the more frequent you check your reports, the earlier you can find those errors. And sometimes we've all heard about cyber fraud, identity theft, and all of that. They do happen. When they do happen, people can borrow in your name and you are not even aware. And guess what? It dings your credit score. So the more you check your credit reports, the more you can see all of this information and you can avoid and escalate and find a way to fix this with the credit bureaus. Okay. And just so you know, if you find something in your report that doesn't make sense to you, please know that the Consumer Bureau is absolutely in support of you contesting whatever you find in your credit report with the credit bureau. So it's your absolute right to say, I don't agree with what I'm seeing here. This is not me. I never took this. It to be thoroughly investigated and fixed to make sure that you get your rightful report. So please check your credit score, your credit report very often. And just so you know, you can go to Equifax sites and check this for free. It doesn't cost money. You can go to Equifax and check your credit report for free. And some banks also give you a chance to check your credit score every day. Okay. But just so we are clear, most of what you see only shows up 30 days past. So your credit, the one to see in your app will usually recycle after 30 days. So try and make sure you check it very often so that you can be on top of it. Okay, now it's getting very serious. Now, I know that a lot of us love our friends, family, colleagues, people we know, and life happens sometimes and people want to borrow, but they come back to you and say things like, can you co-sign this loan for me? Can you guarantee this loan for me? Now, I'm not saying you shouldn't. All I'm saying is you must understand the risks involved whenever you guarantee a loan for someone or whenever you co-sign a loan for someone. It has impacts. And let me show you what the impacts are. So when you co-sign a loan for someone, what it means is that now this is the extreme case, if anything happens to that person and they cannot pay back the loan, you are 100% liable. If you co-sign a loan and the person cannot pay for any reason, you are absolutely responsible. So when you co-sign a loan for someone, make sure you don't quarrel with them. Okay? So they don't put you in trouble. When the person misses payments that they should make, you are also missing the payment indirectly. So it's impacting you directly, just so you are aware. And here is the interesting part. If you co-sign a loan for someone, it actually shows up as your as part of the loan that you are also owing. And depending on how big this loan is, it can prevent you from borrowing in the future. So you want to be careful before you co-sign. I know we are all good people, great intentions. We want to be kind, we want to be helpful, but you should understand the risks behind the decision you make in trying to be kind to other people. Okay. Now, this is where I want to shake the table a bit, ladies and gentlemen. Now, you walk into a store, I don't want to call anyone, but we know a few that are very notorious for this. You walk into a store, you have all the money in the world, you want to buy a piece of, maybe it's a clothing item or a pair of shoes, and it's just, let's say, a few dollars that you can afford. And then someone walks up to you and say, are you aware that if you take this MasterCard, you get a 10% discount, right? I'm sure we've seen this all the time. And this is very notorious for most people who are not used to how this works. Now, you want to be very careful before you say yes to the 10% discount on the MasterCard. You want to be really, really careful. And here's why. This is how I see it, okay? Having worked in the bank for over a decade. The person offering you the credit card, most times, we on this other side that are taking the credit card, you should always ask yourself, does this person love me that much to give me a 10% discount? Is it out of love? Is it out of generosity? Is it in the bid to make the world a better place? The reality is that there is an interest on the other side to close a deal. Now, if you can use that to your advantage, I'm not saying don't take, I'm saying take cautiously. You must thoroughly understand, what does this mean? What interest rates am I paying on this credit card? What are the payment terms? And you must make sure you stay on top of it. I've seen some of those credit cards that once you take them, to pay your minimum payment on a monthly basis, it's a tug of war. You can't just go online and pay it. You have to find a nearby store to do that. If you're not careful, all of these bottlenecks can be reasons why you delayed making payment. And for no reason whatsoever, you can ding your credit score because you're late on a payment. So if you see those cards come to you, please thoroughly review, thoroughly assess, ask all the questions that you possibly can before you sign and say, I want the 10% discount. The 10% discount might not be worth the disaster that you face eventually. Okay? And each time you say yes to those cards, don't forget, there is a hard inquiry on your credit score, and it impacts your credit score, just so you know. Okay? And then
Pascal, sorry, I just want to say you have about 10 minutes so that we can address Q&A
I thought it was 30
and
minutes. Okay.
and end in time. Yeah.
All right. Thank you for that.
Yeah.
Now, the other thing you want to be careful with, some people don't want to take any credit. They don't want to take a credit card. They don't want to take a loan. They don't want to touch anything. And they just want to spend out of pocket. That's great. That's fantastic. You are not violating any moral laws, right? If your job is to be happy in this life, you will still be happy. But here's the thing. You will be credit invisible, meaning that you will not have credit anywhere. It's so interesting that you need credit to build credit. That's the interesting thing about credit here. So if your goal is to do business with the bank, the credit bureau, or anybody who will lend you money or mortgage or whatever, then you need some form of credit to start showing visibility. Okay, so you really want to be careful to say, I don't take credit. It might have other impacts that you do not envisage. So no credit means no score. No score means no approvals, and you may be treated as a very high risk person. Okay, so landlords, employers, lenders are very likely to reject you if you've never touched any form of credit. Okay, and those are the few things we've seen in terms of where people make mistakes. And I hope that that whole portion was insightful. It showed you things that you probably thought that, was normal, or things you can ignore. I hope that was helpful. And yeah, Michelle, I'll pass it on to you now.
Thank you so much, Pascal. That was a very insightful session. Norma said, "Oh, are we ending it already? This is really great. I was taking so much notes. So thank you, Pascal, for bringing those insights to us. We have some questions that have been sent in already, but we have some questions that were dropped in the chat. So I will start with some of the ones that were dropped in the chat while we show the screen for the ones that were brought in earlier. So the first question asked by Jamira. Okay, so let me just take one by we have two questions and then we'll take this ones.
Yeah.
Could you explain the difference between checking your credit score and other people checking it? I've heard that some types can hurt your credit score and others have no effect.
Yeah, Jamila, very great question there. So when you check your credit score on your mobile app, your bank app, or you go to Equifax site and check it, or you go to TransUnion or Credit Karma, whenever you check your credit score by yourself, the intention is that you're not trying to borrow money to yourself. Okay. So whenever you check your credit score, it's just for you to be aware of what is going on in here. It has zero impact whatsoever on your credit score. So it's usually called soft check. So soft is S-O-F-T check. So it has no impact whatsoever. Now, if someone else that you reached out to, maybe a bank or a car dealership company or a telecommunications company, anybody who wants to do business with you or give you a loan, if you hear things like, we will do a credit check, please, that statement holds so much weight. Don't just say yes. Ask yourself, is it worth it? Okay. When that person checks your credit score with the intention to lend or to transact or to give you some form of a line of credit, it will negatively impact your credit score. So just so you are aware. So always ask yourself, is it worth the reduction or is something I can afford? So think about that before you say yes to somebody checking your credit score.
Thank you, Pascal. A follow-up question to that, and this is my follow-up question to that is, some people do not know when to ask if a credit score will be checked because sometimes the other person on the other side will not tell you that they're going to check. So can you tell the room examples of people or places where their credit scores are likely to be checked so that they will know to ask that question?
Yeah. So it is absolutely within your rights as a consumer to be told. Anybody who must check your credit score must tell you. So nobody checks your credit score without letting you know. So, for example, if you walk into a telecommunications, let's say you walk to Rogers or Bell or Telus, and you say you want another line, they will do a credit check. Always tell that in that scenario, they must tell you that that must be done. It's rather unfortunate that a lot of times some people just want to transact, right? The person giving you the card in the store, some of them don't even know that they should tell you. Even when they do tell you, they don't even know the implications of them checking your credit score because they don't have access to the data of how you are impacted. So this is something you should be very aware of, knowing that whenever you want to say yes to that credit card from Walmart, Home Depot, Hudson's Bay, anywhere you want to say yes to a card, always know that they will check your credit score and it will impact it negatively. Just be clear about that before you say yes to it.
Thank you so much. I feel like we need to hear this more and more and, in the very simplified way that you're putting it. The next question I have here asks, what would you say about your bank constantly attempting to give you a 25K or more loan? What are some of the key points to consider? That's the first question. The second question is also, how do you feel about accepting credit card increases? So the first question is your bank wanting to give you more loan, 25K or more. And then how do you feel about accepting credit card increases?
Yeah, thank you. Great question, Michelle. So let me tell you how you get those emails from the bank, right? You'll just be somewhere, maybe in downtown Vancouver, having coffee with friends, and then you get an email saying, hey, you now qualify for an increase in your credit card from 15,000 to 25,000. Just click on this button and accept it. You don't need to apply and nothing happens. Now, when the bank offers you an increase in credit limits, it doesn't affect your credit score. The bank has offered you that. So it's not a random act of kindness. I want us to be clear about that. The bank did not just wake up and realize that Jamira is a fantastic client. Let's just give her an additional line of credit. No, that's not how it works. The bank studies how you've been using your current credit card, and they've seen that you are always pushing the limits. They will come to you and say, do you want more? That's what happens. Now, saying yes or no is now a personal decision. I don't have any trainings or psychological or behavioral trainings to say take it or don't take it. Your financial advisor will be in the best position to tell you take it or don't take it, because they have to look at the history of your account management, budgeting, behavior, lifestyle to say take it or don't take it. But most times, what I would say is you want to be careful before you say yes to it, because do you need it? If you need it, can you handle and pay it off as required? That's the only question I will ask.
Thank you again, Pascal. Someone here said your storytelling is awesome. So just
Oh,
wanted to
thank
share
you.
that in. We can now go to the questions that we already had before the session, and then I will keep checking the chat for more questions. Maxwell, please let us know if you have any questions. So the question we have here is, I've never missed a payment, but my credit score hasn't moved in 6 months. Why?
Great question. So I have an answer for that. So you want to, like I said before, make sure you have the right mix of credit. Okay. If you don't have any credit, your score might not move, right? If you're not careful, your score might even move downwards and not upwards. Okay. So the right credit mix could be a reason for that. The second piece is if you have very high utilization. So you have a $10,000 line of credit, and every month you always hit 9,000, 9,005, $9,865, just near the 10,000, and then you come back. Every month you push it to that far, and then you come back. Those things have negative impacts on your credit score. So the efforts you are making to report your rents, to pay up one loan, but you are maxing out credit card on this other side, they counter themselves. So you are making an effort to build it in one side, but your behavior on the other side is impacting it. So you want to be consistent across board. That's how you can see an increase or growth in your credit score. Another reason is that credit scores usually grow slow. You do not just wake up by virtue of the fact that you prayed so hard last night and then this morning you have a spike in your credit score. It doesn't happen. It's like building muscles. You don't show up in a gym yesterday and today you have six-pack. It doesn't work that way. It takes time. So if you haven't seen any increase in 6 months, my advice is keep doing all the right things and then minimize your utilization. That way you can begin to see an increment over time.
Okay, thank you, Pascal. And I wanted to add, come for sessions like this where credit information is made simple and you can ask questions. So I'll take a real question. We have just maybe a minute, but I have some questions that came in the chat. If you don't mind me prioritizing one of those.
Sure.
It's one person says, I'm paying my loan due before the date. I think the question is trying to say, if I pay my loan before the due date, will it affect my credit score?
No, it's before due date, so it shouldn't have
It
a
shouldn't
negative.
affect.
Yeah.
And the next and the last question I have here is, what's the reason for the variance in scores between Equifax and TransUnion? Which is more important?
That's Femi. So Femi, I don't have my salary, my pay level cannot answer that question. So there is a difference, just so we are clear. And everyone, this is for all of us. If you go to Equifax and check your credit score, and you go to TransUnion and check your credit score, you will see two different numbers. And let me shock you. They might look like they don't belong to you. The difference, the disparity between two of them might be shocking. Okay. Now, let me tell you how credit score is calculated. So there are standards that every credit bureau uses to calculate credit scores. They all have the same standards. However, each of them now have unique algorithms that they use to determine how they rearrange your timeline for payment, the mix and all of that to come up with a score. And they have, I'm not aware that they've had a meeting to say, let's share our secret sauce. They will never share a secret sauce. That's why they continue to be different organizations. And just so we are clear, Binta will also have a Binta's course soon. That's something we are working on, and you should see that coming soon. And you will not see it be the same with Equifax. It's not going to be the same with TransUnion. It will be a Binta's core, and we'll show you how we arrive at that. So, my brother Femi, I don't know which one is better. Like I said, it's beyond my pay level or pay grade, unfortunately. The banks decide, yeah. So what you do is each bank has the one they use. So the banks decide which one that they want to prioritize.
Thank you, Pascal. Maxwell, I think you have a question.
Yes, so there's an anonymous question. So the question is, if your credit is already bad, will you recommend those consolidated credit companies or filing for bankruptcy?
That's a financial advisor question. So filing for bankruptcy is a huge move. And I'm sorry to hear if that's the scenario that somebody is dealing with here, but there is hope. That's not the end of life. That's not the end of finances for you. People do come out of bankruptcy every day, every time. So what I would advise is get a financial advisor. Walk into any bank that you have. If you have a bank, an account in any of the banks, walk in there and ask for a financial advisor and speak to them. I think they will be better prepared. They have better trainings to say, explore A versus B. And I think that way you have what works best. So like I said, I'll offer advice based on what I'm trained to do, what I'm certified to talk about. But this piece around bankruptcy is a bit more elevated. I have personal opinions, but it's not something I'm certified to share.
Thank you, Pascal. And we'll take this one last question because we are at time, and I promised that we're going to spend an hour or an hour 30 minutes, an hour 35 minutes. So this question says, I've never been offered a higher credit limit since I first opened my account. If I request an increase, will it affect or lower my credit score?
So say that again. You have never been offered. Sorry, can you take the question again if you don't
The
mind?
person has never offered for an increase on their credit card. If they proactively request a higher limit, will that impact their credit score?
So sometimes it may. The banks can look at your records and say yes. Other times they will say they want to underwrite the application. So each time they underwrite, underwriting means they will ask for a few information, they will review that, and then they will make a decision, right? So each time you have to go through an underwriting, they will usually pull your existing credit. And when they do pull it, it will impact your credit score, unfortunately.
Thank you. I said that was going to be my last question. I have a question in the chat, but I'm sorry, we have to end the session here. If you have any more questions, please, you can send it to the Binta email address. Pascal, can we do that? Can they send it directly to Binta? Which of the Binta email addresses should they send it to, or is it?
Yeah, I'm dropping it in the chat now. So
Okay.
info@bintafinancial.com. So please, if you have any questions, drop it in the chat. Our team is going to review them. And if there are questions that have generic answers, we'll send the answers to everyone. And if it's something that we can send specifically to you, we'll just send that directly to you.
All right. Thank you so much for joining us for this session this evening. Please don't drop your questions in the chat anymore because the session is ended. We will not be able to pull them. So, but the email address there is info@bintafinancial.com. You can send in your questions. We'll answer to the entire group if it's something that everybody will benefit from. If it's something more personal to you, we'll try to answer directly to you. Thank you. It's been a pleasure being your host this evening. We run these sessions every month. Am I correct, Maxwell? We run these sessions every month, so feel free, look out for the invitations or our ad on LinkedIn or other socials. And if you found it beneficial, invite a friend, invite your spouse, invite somebody that you think will benefit from the session. Thank you, and I hope you all have a good evening. Bye.